I just closed a trade where I made over $8,000 trading after the market panic on Sunday night into early Monday morning. I'm going to show you my trades I love, the idea behind taking the trade, the entry, trade management, and the exit. Now guys, this is not an easy money trade. What I've learned from studying Lance Brightstein, SMB Capital, and other pro traders is that there are sometimes you'll have trades that are A+, and they happen rarely. And as you gain more experience and you see more markets, you're able to take advantage of these types of setups. So this video is not a beginner video. Someone asked me, how can you tell that the market is going to go down like it did? A lot of people are standing on the sideline looking at technicals, but there are some macro themes that we need to cover. So let me explain my trading framework to you guys, and then we'll jump into that trade. There are three components to my trades. There's idea generation, there's the actual setup, and then there's the execution. Ideas are normally generated from some sort of catalyst, some sort of market narrative. So that's number one. Then number two, once I have an overall bias because of a narrative or a catalyst, like some sort of changing fundamentals, like earnings, a central bank is changing a policy, there's some sort of panic, or there's some sort of geopolitical issues that are going on in the world that are driving price. This has helped me have greater conviction when I take my trades, and I'm going to explain the different dynamics that I incorporated when taking this particular trade. Now, I am not a NASDAQ 100 trader. I am a trader that finds edge. I use the broken slot machine concept. So normally you see videos about me trading NAS 100, gold, SPX, R2K, and US 30. But here I traded the Nikkei, Bitcoin, USD JPY, GJ, and Euro JPY because of how much potential edge was there in this play. So the total from this closed trade is about $8,400. And I took Nikkei or Nikkei, Bitcoin, GJ, Euro JPY, and USD JPY. The highest R trades here are the Nikkei, GJ, EJ, and USD JPY. So great return on these trades. And as I mentioned, there is an idea behind this trade. I'm going to break that idea down now. I caution you, don't pay attention to the 8,000. Pay attention to the R, right? Because this can be 18,000, 28,000, 80,000 with the right capital. So as I continue to become more comfortable with this type of trade, this isn't one of my day-to-day trades, but I'll start to size up even more on these types of trades. I incorporated these types of trades into my playbook about 6 months to a year ago, and they offer great return and risk to reward, especially if I time it right. Small risk for a great reward, as you see here. Let's talk about a few macro catalysts. As you gain more experience and you start to follow the macro fundamentals, you'll start to see that there are connections between the markets. And a lot of what's happening is not happening in a vacuum. I am a primarily short time frame trader. And some of this has a huge impact on my overall bias. And also it allows me to have conviction. Some of this protects me from major drops and continuing to go against the higher time frame. And some of this also gives me conviction. So let's talk about a macro picture play. There's three catalysts I want to talk about. The first one is the rotation of money. Okay. So we saw NAS took a turn and started to drop here. The investors started to rotate their money out of NAS 100 and the Mag 7 into the small cap stocks. So what we'll see is a drop on NAS 100, SPX, and even US 30, and we see a rise, a rally on IWM. So that's one of the first things that we want to take a look at in regards to the trade that I took, and just understanding the overall picture when it comes to indices. So secondly, the BOJ, they raised the rate. So that's the Bank of Japan. And what we're going to see is it interrupts what's called a carry trade. The carry trade is where the investors will purchase the yen at lower interest rates and invest in other currencies. So what we're going to start to see is as the BOJ hike hits, we see a massive push to the downside. That move was already overextended. The BOJ was intervening because they had hit like all-time lows, right? Historic lows. This rate hike is a part of the policy changes that they are implementing in order to save the yen. And then After that, you also have the weekly jobs from the US. High unemployment was reported, right? So what you're going to see is you'll see the DXY taking a drop. You'll see stocks as well. They take a drop from that report here. So we see massive selling. Okay, so that's Thursday, massive selling. Friday, massive selling, sell-offs, right? You have investors, you can see them unloading stocks. They're unloading from the currencies. And not only do we see US stocks taking a hit, but also you see the Nikkei. So this is the Japanese stock market taking a hit as a result of the BOJ's decision. So we have Thursday selling, Friday selling, and then Sunday night, Monday morning, we have continued selling across the market. Okay. So from between Thursday and Friday, the Nikkei is down like 20%. The USD JPY is down like 8%. Massive moves, right? NAS 100 is down like 10 to 12%, right? So when you see these types of moves, you can look for the continuation, but there are a few catalysts that stacked and it caused panicking. It becomes a self-fulfilling prophecy. So you have the BOJ raising the rates, and then you have the weekly jobs coming out, hinting at a potential recession. So those two catalysts come out, and then that selling begets more selling and panic. So this is a large range of a move. 10% on NAS 100, 20% on the Nikkei, and Bitcoin as well. Bitcoin takes a hit. There is a correlation between stocks and Bitcoin. So Bitcoin is also down 24% as well. So I'm looking at this, and in times when there's panic like this, a lot of it is not an actual structural move. You start to have reports come out to dial back what happens. On Monday morning, early morning, I'm looking for a potential bounce play, and that's what I took. So there's times when there are geopolitical catalysts that come out, cause a push down, and then there's a recovery. For example, April 18th, you had a missile strike in the Middle East. Price gapped up from panic. We saw gold gap up, we saw oil gap up, and we saw indices gap down. And then as reports started to come out to explain what had happened and that it wasn't as severe, you have an immediate correction. Okay, so these types of plays aren't your easy money plays, but these are plays that as you have experience in the market and you see when catalysts start to come out and you see a massive gap down that is caused by panic, a lot of times those moves will have a correction and you can start to buy or sell into those moves. Sometimes when this happens, people over leverage and it kills them. I treat these trades just like any other trade where I am going to size properly. I'm going to look for a setup that gives me a good risk to reward, a good R&R, and I'm not going to YOLO the trade, right? So if I would have taken a loss here, I'm still good. But the trade played out and rewarded me great R&R. So I just want to remind you that this is not a beginner easy money play. And this is all based off of a higher time frame example, but I want to show you on this channel both more advanced trades as well as the easy money scalps. Okay, so I wish I would have been up. I would have positioned myself a little bit lower here on the buys, but since I didn't, what I did is after the market opened and price pushed up and came back, and I saw this level holding, I entered a buy, and since my stop loss was going to be pretty wide. This was more of a longer term trade idea, right? So I was looking at us potentially recovering at least half of that drop, right? Or potentially more. And the trade is pretty similar across all of them. So we had the bottoming out, we pushed up at the open, we returned, and then I entered, and I was doing pretty well. I was up maybe about, across the accounts, I was up, by the end of the day, like 3K here. I ended up being up like about 5K here. And then what happened is, okay, as I started to break levels here, what I did is I just moved my stop. Okay, so at first I went to break even as I started to hit these levels, these obvious levels that were created. And as I saw price break a level and settle, I just moved my stop loss, right? And sort of trailed it, okay? Just so that I wouldn't lose out, especially after being up. But I did suspect that we could potentially continue. So I was up 5K here, And then as price moved down, I did start to, worry that my profits were, I was losing profits. I was up maybe about 2,700 down here. And then what happened is I held it through Tuesday, and then Wednesday, early morning, it popped up through that resistance level here. And I was up about 8,700, about $9,000 at one point. So as price started to retrace, I went ahead and just closed it because I had been holding it for about 2 days. As I mentioned, similar situation across EuroJPY, GJ, the Nikkei, and USD JPY. So the same on the pop of the open, return, entered and placed my stop loss, and then I held, right? And then the BOJ actually came out and made a statement kind of walking back their rate hike, which helped us out here, right? So we benefited from that pop, which is what happens a lot of time when you have the big panic. The continuation would really destabilize economies, right? It would destabilize a country's economy. So if they make policy changes, they also have to try to relegate some of the damage, which is what happened. And I benefited from that. If this video was helpful and you want me to cover different types of strategies that I have in my playbook that I've acquired over time, please like and subscribe and let me know in the comments section. I have a video that's highly underviewed. It's about how to use supply and demand with order flow, how to trade both passive and aggressive supply and demand. A lot of people get faked out using supply and demand zones. This video will help you improve your supply and demand trading, your entries, your exits, and your awareness of where the larger buyers and larger sellers are at. If you want to see that video on supply and demand, click here.